Hello and welcome, everybody. Happy Friday. Welcome to the end of another week, the beginning of a weekend, but first, a 1 hour Sectors Made Simple webinar. Today, I'm here to talk to you all about a topic that might seem pretty obvious and pretty easy to answer. What is a sector? After all, if we don't understand what a sector is, Sectors Made Simple is a pretty weird name. But what seems like a very obvious question to answer on paper starts to become a little bit more detailed and nuanced the more we get into it. So today I wanted to talk about what is a sector, and not just what is a sector, but who decides what a sector is. There's a lot for us to unpack there. There's two groups that think they know what sectors look like, and while they might agree on what sectors are, they might not agree on exactly what sector every company falls into. So I want to talk about all of this and more as we look at the terms of what a sector is in a little bit more detail and understand the key players involved in helping us to understand what companies belong in what sectors and how ETFs fold into all of this. So I hope you all are excited because there's a lot for us to unpack here, so let's get straight into the action, shall we? So today I want to talk to you all about what makes a sector a sector. Also, let me get rid of this thing. Alrighty. Disclaimer, today's is not very important, but it's here. I'm just going to quickly mention it and we'll move on. This is all my own research, my own preparation, and my own findings that I want to present to you all. This should not be taken as financial advice. This is solely meant for educational purposes. Past results when investing can never guarantee future performance, and always do your own research in addition to everything you hear here before making any investment decisions. Cool. So the goals for today's webinar are simple. We're going to answer the question, what makes a sector a sector? And again, this does seem like an extremely easy question to answer. And if you understand anything about ETFs, you probably know the simple answer to this question. But there are many other questions that aren't just what makes a sector, such as who decides what companies are in what sectors? Who decides what the sectors even are? And also, there's a big difference between what a sector is and an industry is. And while that's not going to be the main focus today, it is something that we should mention because it will be relevant to when we try and understand the differences between what people are saying a sector really is. So today, we'll try and answer all of these questions and more as we learn about sectors, industries, and why they matter for us as investors. After all, we want to know why we should care about any of this, and I will explain that. So first, let's get the good stuff done right off the bat. What is a sector? Well, it's a group. It's a way of putting a bunch of companies into a single folder, grouping them together. And we group them based on what they do, what their business is. So sectors are meant to be more high-level ways of categorizing companies. So we should be looking at ways of taking companies and putting them into sectors where we'll have a couple dozen, or if we're looking at a bigger group, hundreds of companies per sector. And just to quickly give some examples here, a sector would not be they make toilet paper. A sector wouldn't be they make soda. A sector would be they make essential consumer products. Or to turn that into something that we would be familiar with, they are consumer staples. They make consumer goods that we consider to be staples. They are not the we want these, it's the we need these. It's our food, drinks, toilet paper, basic household goods that we need in order for us to be able to function. But exactly who decides what sectors are sectors? Because again, I made a pretty big jump right there from they make essential consumer products to staples. How did we get from point A to point B? And who decided that we went to B instead of D? If you asked an economist, their answer might be very different. A lot of this idea of sectors is based in an old understanding of how we make society and how we grow as an economy. Thinking back hundreds of years ago, or thousands of years ago, really, everyone was a farmer. Everyone was a farmer because we needed to be. And pretty soon, we started to learn about manufacturing, making tools to help farming be easier. As we did, then people started to be farmers, and people started to be the people that make the tools. Then the tools needed materials, so there were people to collect the materials for the tools. And then after a certain point, we got more advanced, and then we went from not just pulling things out of the earth to making things, but then services. Things like education, things like, for example, services where if you needed to have someone come and be a plumber, that is something that would not be possible if we didn't have tools and we didn't have raw resources. What I'm trying to get at here is a lot of these sectors were born out of things that we need for our economy to work. They are from raw extraction, so things like lumber, fish, oil, metals, and materials. All of those are raw resources. Then we have manufacturing, which is making tools or taking those raw materials and processing them. And then we have services. And this is what's known as a three-sector system or a three-sector economy. That is something that everyone agrees on. What people aren't in agreement on is how do we turn that into 21st century information? And who gets to decide what a sector is? For something like oil, that's pretty easy for us to think about. It would fit into energy. But who says energy is the sector, not oil? The lame answer is anyone. Anyone can decide what they think a sector should be and what companies fit into that sector. It sounds kind of funny because who's going to trust me to say, all right, I think that all of these companies are energy, and that's it. But at a certain point, we need to trust someone. We have to have a similar thing that we look at and say, that is the correct answer. So to give a more serious answer to a silly question, one of the most common ways that we can group companies or categorize them into sectors is known as the GICS. GICS stands for Global Industry Classification Standard. It is a system of turning companies into sectors, industry groups, industries, and then sub-industries, set up by Morgan Stanley, or MSCI. And like I just mentioned, this is not something that is only related to sectors. They do sectors, and then they do industries and sub-industries as well. It's honestly really interesting, just from an economic standpoint. But inside of that, there's also a lot of really important information that we care about as investors. Notably, this system is widely used by stock screeners such as FinViz. Maybe I'll talk about that later. Maybe they use it. But also fund managers and other large indices that we'll talk about in a couple minutes here. So first, before we get into who uses these indices or these classifications, let's talk about what GICS is. GICS takes takes companies and tries to break them up into 11 different sectors. The goal of these sectors is that any company can fit into one, and preferably only one, of these sectors. These sectors are, listing them all, we have 11 of them: energy, materials, industrials, consumer discretionary, which is cyclical goods. Those are the I want these, not the I need these. Consumer staples, these are the I need these kinds of things in your life. Healthcare, financials, information technology, communication services, and utilities, and real estate. Now, I'm not going to go into too much detail about any of these. This is something we have talked about a lot in subsector spotlights and in studying these sectors in more detail in the past. And if I wanted to go through each one of these in a lot more detail, we'd be here for a really long time. So what I will do is, in the chat right now and in the description, is the documentation for how GICS is made, and they go into detail about what all of these sectors actually are. If you don't want to hear it from me and you'd want to read it yourself, that is where I get that information from, and it is very interesting. Also very dense. It's 40-something pages. So let's summarize things a little bit. We have 11 sectors, and then within sectors we have industries. These industries are meant to try and take a sector and break it out a little bit more. And we try and do that by looking more specifically at what companies do. So within industries, there's actually two different levels. We have sectors up at the very top, then we have industry groups. Industry groups is going to be bigger, again, groups that are one or more industries in one. So for example, within the energy sector, we have two industry groups. We have oil, gas, and consumable fuels. That is the extraction of oil, gas, and other consumables. And then we have energy equipment and services. These are going to be the people that manufacture the oil rigs, the companies that provide logistics or transportation for oil from extraction to refining. There's lots of different jobs here. Remember, like I said before, that three-step system that we have: raw materials, refining, and then services. The oil, gas, and consumables is that primary sector. It is that we take things out of the earth, and that's our job. We take things out of the earth. Energy, equipment, and services is that secondary sector. It is we don't take things out of the earth, but we make tools for you to take things out of the earth. There are companies whose jobs it is to manufacture oil rigs, create a system that allows an oil rig to go out into the middle of the ocean, and sometimes in over 1,000 feet of water, not float, but actually sit on big posts. How do we get those oil rigs there? And how do we service them? That's level 3. That's the services part. Who keeps the oil rigs working safely? Who makes sure that they are safe? Who sets the rules for why they're safe? And then within these industry groups, we can get even further. We have oil and gas drilling, and then we have oil and gas equipment and services. All of this gets smaller and smaller and smaller, and energy is probably one of the easiest to look at. Quickly just showing you what this doc looks like. Within energy, equipment, and services, we have two industries. Within oil, gas, consumable fuels, we have 5. Within materials, we have 1, 2, 3, 4, 5. We have 5 different industry groups and almost 20 different 20 different industries. This gets pretty deep. And we can do this for every single one of the sectors. So let's ask, does this make sense? Should we really take the time to do this? And is this the right way to do it? And that's the bigger question here. Because let's be honest, most companies don't do one single thing. For small companies even, Sectors Made Simple, we don't just do webinars on YouTube. We also create tools. We do market analysis. We create tools to help you invest. So we do education, but we also do tools and building tools. Are we information services? Are we technology? Or are we education? And if education is a thing, what sector does that fall into? That is a service. So we can get pretty detailed for just a small company like Sectors Made Simple. For a larger company like Amazon, it gets even more complicated. Amazon, you probably all know, is the internet retailer. You go to Amazon, you can buy literally anything. But if you are a software developer or someone that is very technologically savvy, you might also know that Amazon Web Services, or AWS, is a very large enterprise that handles data. Data storage, processing, virtual machines, hosting, they do everything. So that part might be technology or communication services. While internet retail is probably going to be discretionary. Many companies, and by many I mean most companies, do many things across multiple industries, and in the cases of, for example, Amazon, across different sectors as well. Let's do another example. 3M. Is their ticker symbol. As a consumer, you probably know about 3M as a company that makes tape. Command strips, 3M. Duct tape, probably 3M. They make consumer goods that you probably need around your house for hardware projects. Does that mean that 3M is a staples company? They make consumer staples goods. Okay, we can make a case, but the majority of 3M's money does not come from you, me, or Juan de los Palotes down the street. It comes from large industrials companies. Companies that need not their end product, but they actually need these industrial tools. Things like industrial adhesives, ceramic materials, and filtration systems. So now is 3M industrials. A case could be made for industrials. And up until a few months ago, 3M also had a food safety division. And we're not talking a small one either. This was an over $1 billion subsidiary of 3M that was responsible for testing food and drink products for safety for us to consume. Would that be technology or healthcare? Now, if you asked me, I'm a consumer. If I'm not looking at their revenue, if I'm not looking at how much money they make from these 3 different parts, I'm just going to say, you know what? The only times I've seen 3M as a company is when I'm going to the store and I want to buy some command strips to hang something from my ceiling. I might say Staples. If you asked MSCI though, if you asked the GICS, It would be industrials. So to understand a little bit more of why, let's figure out exactly how they decide what sector a company is in. So, how does GICS or MSCI choose a sector? What they do is pretty simple, honestly. Public companies publish their financials, balance sheets, and the knowledge of where every single dollar that came into that company came from. Where did they make that money? So what they'll do is they'll look at all of these different sources of information. They'll look at where they made their money and how much they made. And they will say, this little part of your business, the command strips business, is staples. The industrial manufacturing side, industrials. Food safety, healthcare, or maybe technology. Then they'll add up the sales from all of these different industries. And then they'll say, if I add them all up, what sector has the largest percent? If a sector has over 60% of a company's revenue, that's easy. They say, this is the sector. And in the case of 3M, over 70% of their revenue comes from industrial level sales. So that makes them industrials. Amazon. The majority of Amazon's business comes from being an online retailer. So they're an online retailer in discretionary. Now, this is pretty easy when over 60% of a company is dedicated to one specific sector. But if no sector has that 60% majority, say it's 59% and 41%, then what they'll do is MSCI will go in and do some additional analysis to try and decide what sector they think that company should belong to. That's pretty interesting, but then someone's deciding what they think it should be. Again, if everything I'm talking about right now is something that is actually interesting to you, go take a look at that document that I linked earlier. I'll post it in the chat one more time. If you're watching this recorded on YouTube, it'll be in the description. If you're watching this over on our webinars site, learn.sectorsmadesimple.com, thank you. We appreciate it. Also, it'll be in the resources section below this video. Now, we've talked about what a sector is, what the 11 sectors that the GICS looks at are, and how they decide how a single company that does many different things fits into one sector and one sector alone. Cool. But who actually uses this stuff? Who cares about what sector a company is in? This is going to seem like the obvious answer, but most of us. Most of us care about GICS. So to go into this in a little bit more detail, let's look at a couple places that either definitely or likely use GICS. FinViz. It does not use them exactly. If you go to FinViz's website and try and understand where do they get their sector classifications, they're not clear about where they get them from. But in my understanding and through my analysis, I found that almost 95% of the sector classifications that FinViz has match up with GICS. Their industries are identical. State Street. The ETFs that we look at for sectors made simple, your XLKs, your XLREs, your XLIs, all of those, they use GICS sector indices as their benchmarks for what they track. But not only them, S&P Global, the group responsible for the S&P 500, they also use GICS as their way of classifying sectors. Those State Street Spider ETFs, they track S&P sector indexes. S&P decides what makes it into those indices, and they look at GICS. And they are not the only ones. Many, many, many sources out there look at GICS as a way of classifying sectors and companies into said sectors. But is that the only way that we can do this? Is GICS the only option that we have for classifying sectors? No. No, it's not. But it is probably the easiest. Another way that sectors can be classified is the ICB. ICB stands for Industry Classification Benchmark, and this was an alternative to the GICS that was developed by one name that you might be familiar with and another you might not be, but you should be. Dow Jones, you might know from the Dow Jones Industrial Average, and the Financial Times Stock Exchange, a London-based group called the FTSE, or as you might know it here in the US, the Russell. The Russell and the Dow Jones, are the ones that are responsible for creating this ICB classification system. Now, there are a number of differences between how industries are handled. For example, for GICS, they have sector, then they have industry group, and then industry, and then sub-industry. It's this big pyramid. ICB does things a little bit differently. They do things where they will go sector, super sector, industry, sub-industry. So they look at things in a slightly different way, but at the core, if all we care about is sectors, and that's all I'm here to talk about today, is the sector level classifications, they thankfully use the exact same 11 sectors. They are identical, but how each company is classified is a little bit different. And I don't want to get into those differences today. What I do want to cover is how that number 11 came to be. Was it always 11? Not exactly. And to talk about that, let's ask the question, can sectors be added or removed from the GICS or ICB? Yes. While it's not very common, it does happen. And to use GICS as an example, GICS was originally developed in 1999. And while it is not common that new sectors are added, new sectors definitely are added. The last time we saw this happen wasn't in the early 2000s. It was, funny enough, only 6 years ago when we saw a new GICS sector be added, being real estate. In 2016, the real estate sector was added, expanding the GICS sectors from 10 to 11. But wait, if real estate was newly added, where were they before? Was it the real estate market didn't exist before 2016? Well, anyone that lived through 2008, which is probably most of us, know that the real estate market definitely was around before 2016 because it crashed. You have to have a market in order for a market to crash. So the real estate market was a thing, but it just wasn't a sector that GICS recognized as a sector. So where did they live before? Keep in mind, most of the real estate sector are these real estate investment trusts, REITs. So where did those REITs live before this? Financials. They used to be grouped into financials under some sectors that were related to real estate management, real estate sales, real estate development. There were many different industries that were used for these real estate REITs. I guess that's slightly redundant, but for these real estate investment trusts, they used to all be under financials until 2016, when they were all lifted out and put into their own sector, being real estate. Now, here's the biggest problem with GICS and ICB. They both suffer from the exact same problem. Something, whether it be an algorithm or somebody, being a person, decides these sectors. And that is slightly subjective. Because if we're really going to try and say what a sector is and hope that every single company fits into one mold and one mold alone, that's tricky. Because while many companies do fit nicely into certain sectors, not all companies are as easily agreed upon. And even today, and I quite literally mean like October of 2022 today, we are still seeing companies change, major companies that are not new by any stretch of the imagination, move from one sector to another, or just be in a completely different sector than what we would expect them to be. So while these two authorities, these two major groups, ICB and GICS, ICB being supported by Dow and Russell, the Dow Jones and Russell, and the GICS being from Morgan Stanley, MSCI, and S&P Global, these are major institutions, and they don't always agree. And even then, there are other sources that we consider to be trustworthy that have a different idea of what sector a company should belong to. And that's where I say FinViz, most of the time, 95% of the time, matches what GICS has, but not always. So I want to highlight a few examples of where this happens, that we see a sector be different for a single company, depending on who you ask. So here's how we'll actually do this. It's going to be a little bit of a game. We're going to have some audience participation, and we're going to have a little bit of fun along the way. So to serve as the GICS pick, we need something to go off of. And the way that I did this was I went through the holdings of the sector ETFs from State Street Spider. So for example, for technology companies, to get the list of technology companies, I looked at the holdings for XLK. Why? Because State Street Spider tracks an index. It is an index ETF. And the index it tracks is the S&P 500 Select Sector Indices. The S&P 500 Select Sector Index are based on the GICX, or the GICS sector categorizations. So that is the best thing that we'll find for GICS. For another source, we're going to look at FinViz. Why? Because FinViz isn't entirely GICS, but they're also not entirely ICB. And in fact, I wish that they were a little bit more clear about where they get their classifications from. But they're not. So the best thing we can do is say, well, we can use them as the point of comparison because it's definitely not GICS entirely. So let's see how they compare. We'll compare FinViz and GICS to see where the similarities lie. If you're sitting there questioning, why aren't you doing ICB? The reason is I'm trying to make this just be an example, and I'm trying to have this be something that appeals and applies to many of us. Most people that have been following our webinars are very familiar with the sector ETFs for the S&P 500 from State Street Spider. It is the easiest group for us to look at because it is the group we're most familiar with. Likewise, FinViz is a screener and a stock data site that we talk about and show quite a bit in our webinars. So it is a familiar face for many of us and a source that, again, they are not giving wrong information. I don't want you to think that because it's not GICS, it's wrong. It's not. It's just different. There is no right or wrong sector. It all depends on how you find the sectors or where you base your information. And everyone at some point has to be subjective. So let's see some cases where that subjectivity results in different sector classifications. We're going to start off here with Dollar General, ticker symbol DG. According to their website, Dollar General makes it easier to shop for everyday needs by offering the most popular brands at low everyday prices in convenient locations and online. Not me saying that, that's their website. What they actually do, they sell food, snacks, drinks, but also office and school supplies, auto and hardware goods, and medication and healthcare needs. They do a lot. And their whole goal is give you everything you need for cheaper, wherever you need it. So, audience participation time. What sector do you think Dollar General falls into? They sell medications. Is it healthcare? They sell auto goods. Auto usually falls under discretionary. Is it discretionary? They sell food, snacks, and drinks. Is it staples? What do we all think? What sector should Dollar General fall into? One vote for discretionary, financial. Any other good guesses? Again, there is no right or wrong here. It is very much going to come down to what GICS and FinViz both have to say, and then we get to decide if we agree or not. So, let's see the answers. If we asked FinViz, what sector is Dollar General in? What you'll end up getting is consumer staples under the discount stores industry. Okay. So it's staples, right? Well, it wouldn't be on this list if it was in agreement, staples. According to GICS, Dollar General is discretionary. Consumer cyclical goods. So which one is right? Is Dollar General a retail store that tries to sell things cheap and accessibly discretionary? Well, again, here's the interesting part of this all. There is not a right or wrong answer. One is not correct and the other is wrong. But funny enough, in this case, we do have a pretty good idea of which one of those is the better answer. Because no answer is right or wrong, but one is better. In April of this year, Dollar General, alongside two other major publicly traded companies, Target and Dollar Tree, were moved from discretionary to staples. But wait, I thought I just said it's in discretionary. What gives? Because this in April thing is not some random person saying they're moving it. This was GICS coming out and saying, we will be moving these companies from discretionary to staples. They fall into the same category. the same industry. And they're moving that entire industry over to Staples. Note, these changes, the reason that I'm talking about them right now is because they will not go into effect until 2023. So while this decision is already made, right now, we still find Dollar General in the holdings of discretionary, not Staples. Really quickly, I'm going to have to take the PowerPoint down for 1 second because the next slide, it would have given you the answer right away. But while I'm doing this, I'm just going to get you all starting to think about the next question, which is going to be MasterCard. What sector do you think MasterCard falls into? All right, let's try this again. We're not going to take it from the beginning. We're going to go to Dollar General, MasterCard. Here we go. Sorry for that. Sometimes PowerPoint works really well, and then other times it doesn't like me. MasterCard, huge payment processor. You got Visa, American Express, Discover, and MasterCard. MasterCard is a global payment provider that works with both consumers and merchants to, according to them, make transactions safe, simple, smart, and accessible. What sector do you think MasterCard falls into? Financials, financials, technology, financials, financials, financials. If you asked FinViz, it would agree with the majority of you. Financials. Instead, if you cared to look, and also it would be under financials and credit services. If you asked GICS, it would be technology. Interesting, right? But MasterCard's not alone. They are not the only company that has this exact same classification problem. There are some other small companies. I'm not sure if you're going to be familiar with these ones. They are much smaller, but I'm going to mention them just in case these are names you've heard of. You kind of start to get what we're going with here. So again, very small companies, being PayPal and Visa. If you can't tell, I'm being very sarcastic. These are three massive companies, three of the largest payment providers in the world. Visa being the biggest. But PayPal, Visa, and MasterCard are their classifications change if you're looking on FinViz or if you're looking at the holdings of these State Street Spider ETFs that follow to a T the MSCI or GICS classifications. So that's three pretty big examples of where not everyone agrees on what they should be. Most of you agree it should be financials. Maria thinks that it should be technology. And both groups are extremely right, depending on who you say is the right or wrong answer. And again, there is no right or wrong. They are both right for different reasons. The last one that I want to give an example of is Walgreens Boots Alliance, WBA. In the US, you will be familiar with the first part of that statement being Walgreens, a retail pharmacy chain, while Boots is the Walgreens of the UK, being a similar pharmaceutical chain over in the United Kingdom. What sector do we think Walgreens Boots falls into? What sector do we think that falls into? And again, what I'm doing here is only looking at the S&P 500. That is the important thing to mention. We are only looking at S&P 500 companies, so we're not looking at small companies that the classification might not matter. We're talking about S&P 500 companies, some of the 500 largest companies in the US securities market, having differences that result in major ETFs changing what they invest in. Remember what I've said before about Target and Dollar Tree and Dollar General. They are changing from discretionary to staples. And as a result, those three securities will be dropped from XLY and will be in XLP instead. That is a pretty big change. So the majority of you all are saying healthcare, 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 pharmaceutical, healthcare, and one person saying staples. FinViz would agree with the majority of you, healthcare. GICS would agree with Alma, being staples. What the heck is going on here? How do we continue to find major companies in the S&P 500 having significant differences in what sectors they are a part of? Arnulfo is saying, why? Because that's the world we live in. That's the financial world we live in, and why I wanted to do this webinar. Part of the fun of doing this webinar is to have people question why. Why are there so big of differences in the 500 largest companies in the US? So now we've looked at 6, 7 different versions of cases of S&P 500 companies that one place says one thing, one place says another. And none of them are wrong. My goal in explaining all of this to you, my goal in addressing what sectors are and what makes a sector, is to make you question why. And why do we trust MSCI, or why do we trust Dow and Russell to choose what sector a company belongs to? And I just want to mention, I've chosen the 2 largest classification systems. Those are not the only ones. I'll show you another one later on today that is a 3rd place that has completely different sectors that aren't MSCI, or rather, I'll just use their names of the systems, GICS or ICB. It is a 3rd system entirely. So the goal here was not to tell you that GICS is right and FinViz is wrong, or that ICB is worse than GICS because it's not as commonly used. My goal today was to highlight that all of this process of creating sectors, while we do more or less agree between these 2 major groups about what sector names we should use, where they draw the lines changes. And just because GICS and ICB are the most common systems, it does not mean they are the only ones. So now, why should I care? What was the point of learning about all of this and probably getting a little confused along the way? I'm going to talk about this in 2 different ways. As an investor, but also as a person that is involved in Sectors Made Simple and for Sectors Made Simple subscribers. Kike, transportation should have its own sector. That is an amazing point. If you go on stock charts, charts and tools, and you go down to candle glance at major US indices, you get a lot of major indices, and oh hey, Dow Jones Transportation Average. Transportation should be its own sector because it also has its own index. But it's not its own sector. Just like another sector that I think should be a sector is clean energy. I'll mention that in a second here, so let me go through the slide before I get ahead of myself. As an investor, it is important for you to understand what does and doesn't make it into a specific sector. If you wanted to invest in staples because you wanted exposure to companies like Walmart, Target, Dollar Tree, and Dollar General, you're not going to get access to all of those because right now, The only one that is in staples is Walmart. The rest of them are all in discretionary. So understanding why that's the case is extremely important. Or here's my other example. If you wanted to invest in solar, what sector do you think you would want to go in and buy? If your goal was, I like solar, what would you go and buy into? An energy ETF or a technology ETF? What do you all think? Technology, REIT, technology, energy, technology, energy. There is a correct answer to this because, again, State Street Spider looks at the GICS. They say solar goes into technology. Yes, solar is energy. It is creating energy. But the way that MSCI and the GICS has decided they draw the line is that energy is non-renewables. It's not that it's only dirty energy. It's not only coal and oil and gas. It's also uranium, which is clean energy, but it is not renewable energy. Things like renewable energy, hydro is going to be in a different sector entirely. Solar is going to be in technology. So they might not be as simple as you think. And understanding why that might be the case is very important. The other thing is that if you're looking at buying into different ETFs, it is important for you to understand that when you're buying into a security that is an ETF, they track an index. It's important for you to understand what that index is. And if you're looking at sector ETFs, the decision of what exactly goes into that sector is going to be determined by that index that they follow. And that index might be a little subjective. It's not going to be exactly what you might think it should be. And it's also important for you to understand the differences between different indices and the key organizations responsible for them. And to show that a little bit more clearly, I want to go over to Vetify. It used to be ETFDB. We're going to go here and we're going to look for, let's go staples. ETF database, we'll go here, go to staples. Actually discretionary because there's more of them. Here's XLY. If we click into XLY, we see that the index that they track is the Consumer Discretionary Select Sector Index. Cool. If we go down to another one that is US consumer, now we're no longer looking at the S&P 500, we'll see a slightly different group. We'll see the Russell 1000 Consumer Discretionary. Remember now, you understand the name Russell. Russell uses ICB, not MSCI's GICS. Something that follows MSCI is going to look at the MSCI index. One is not better than the other, but they're both different, and it is worth, if you are investing in these actively, that you look at their holdings, that you understand that their holdings are not going to be the same things, and that one might say something slightly different than the other. So that is why it matters to investors. When you look at sector ETFs, you will find differences depending on who made the index that that ETF tracks. And again, ICB which you might see as Russell or Dow, is going to be different than GICS, which you will likely see as MSCI. But the other thing is that it matters to us here at Sectors Made Simple, because we're working on a new tool. The new tool is going to be an S&P 500 matrix. The goal of this is that we can turn the S&P 500 into something that is an actual stock screener and a matrix all in one. By looking at the 500 companies in the S&P 500, we can find leaders in any given moment. And we can combine that information with sector leaders right now to filter down to see a list of the leading companies within the leading sector. But it's not as easy as you might think. Here is the matrix. This is the look at who the leading sectors are right now. And you might say energy is the current leader by a significant margin. And you can come over to the matrix and then say, okay, I want to only see companies in energy. Okay. Where's energy here? Well, the data source that provides us with these sectors uses a different set of industries and different set of sectors. Their sectors are these. Their sectors are not energy, staples, healthcare, utilities. They use a different set. And in this set, there is a transportation and warehouses sector. So we got our work cut out for us because we're all familiar with MSCI, with this GICS format. So we need to get that correct format over here. So how do we decide what to do with that? Again, this is where GICS comes into effect, because we've chosen to use GICS classifications for these sectors, which means if you're watching this at a later point and the matrix is already available to you, you might see a difference where you'll look at our matrix and see, oh, well, Visa is in technology, not financials. Why? Well, now that you've learned what you've learned in this webinar, you understand why. It's not that Sectors Made Simple is right and FinViz is wrong, or FinViz is right and Sectors Made Simple is wrong. We all work on a similar goal of classifying sectors. What those classifications are will be slightly different depending on who you ask. But they are not right or wrong. It all depends on who you ask. And the most important part is that you are consistent. Know what you are looking at, because now you know a lot more about the different choices of what you might see, how they're similar, how they're different, but how they all help us to understand the market that we invest in a little bit simpler. So, thank you all so much for joining us for today's webinar. I hope you found this information useful and insightful. And if you have any questions or topics that you'd like to hear us cover in a future webinar, please feel free to email us at support@sectorsmadesimple.com. We're always looking for new ways to help provide you information and tools to help you invest simpler. So thank you all so much. I hope to see you all back very, very soon. Take care. Have a great weekend.